Hi, my name is Enrique Torres, and here at Empower Brokerage, we like to shed light on some of the things that we offer to our agents and to our clients with respect to the life insurance products. Today's topic, I'm going to talk about the difference between a term solution, term life solution, and a whole life solution. You may have heard me speak about this before, but I'm going to try to see if I can make it more relevant today on where it would be appropriately used, the different type of insurance products for different age groups. So let's start off with the term insurance. So term insurance, as many of you may have heard already, it's more like a commodity. It's pretty straightforward. A lot of carriers are offering it. Even your employers might be offering it to you as a benefit. So term life insurance, it's temporary. As long as you pay your premium, you'll have coverage. If it's an amount to pay off debt for estate planning, when you pass away, the benefit goes to your beneficiary. So as far as the type of insurance that you might be thinking about, the term insurance can have some living benefits such as chronic illness, critical illness, or even terminal illness, and all of this is to advance on the face amount. Now, where to use or where to suggest using term life insurance? Most people that I've dealt with in the past typically consider term insurance in their younger years. And what I mean by that is that those that are developing their careers, taking on more debt, having more children, their family growing, or they may have a business partner in which they want to ensure that if something should happen to them, that the business is taken care of. So the most affordable to cover the risk if someone passes away is going to be the life insurance. So term life insurance in this case. So once more, those that are younger find it more affordable, they're healthier, it's going to be easier to access. Nowadays, it's even further accessible because of non-medical underwriting. In other words, no medical exam is required for the application itself. So with all of those quote-unquote features, typically it's someone that I see that is younger that is moving forward with a term insurance. Keep in mind that term insurance can be converted to a permanent policy, whole life. And the reason to consider that, here's another reason again, is that as you grow older, our health may change. Definitely we're older, our cost may change if we decide to wait on applying. So by locking in with a term policy, you ensure the ability to get permanent insurance without having to go through any type of medical underwriting. You're protecting your insurability. Now compare that to a whole life policy. As the name implies, whole life is for the rest of your life. So as long as you pay your premium, you're going to have that coverage. And you may have heard me say before, for whole life, it is based on guarantees. You can also compare that to universal life or even index universal life. But for our purposes today, I'm going to focus on whole life. So as long as you pay your premium, you're going to have coverage. Depending on the case design, you might be able to build up some cash value in the policy itself. So those that have a little bit more discretionary income, keep in mind that many of the features I mentioned regarding the term policy are also applicable with permanent, or in this case, whole life policy. But because the person is able to afford a little bit more coverage, or should I say they want to build up their coverage or build up their cash value, the whole life may make more sense. So if you're talking to somebody who can afford in their discretionary income to pay towards a permanent policy, it may make sense for when they're younger. But typically I have found that historically that we're looking at someone who's further along in their career, and they have minimized any debt, they have started saving, and so they have less of a need for the term insurance, so that now they want to start building on their permanent cash value for legacy purposes or even estate planning purposes or retirement purposes. And I'll cover that in a moment here on a different topic, on a different segment. But here again, it may be more applicable for a young professional, someone who has a business and they want to start building up that reserve. Or it could be more applicable with business partners where they've already decided, as I mentioned, term insurance is affordable, but they've decided they want to put some money towards this whole life, and as they are able to afford it through their company, they increase the cash reserve. So in the future, if they want to quote unquote cash out the policy, they'll have that available to them to complement their retirement needs. Well, the purpose of me mentioning that again is based on affordability, based on the needs of the individual. Now, one last thing I'll mention about the whole life policy. Some people consider it for final expense use. So the lower the face amount makes it more affordable. And for final expense, I'm talking about funeral expense, could be for internment, could be for services, etc. So final expense, lower amount, anywhere from $15,000 to $50,000, just to take care of when the person passes away, when they pass away. If you'd like to learn more about this, give us a call here at Empower Brokerage at 888-539-1633. Thank you.